Here is your weekly quick ticker brief. The S&P 500 and Nasdaq just had their best week of 2024. It was a surge of buying. The S&P 500 jumped 3.2%. The tech-heavy Nasdaq, it soared even higher, up a remarkable 4.5%. This incredible rally has injected a much-needed dose of optimism into the markets. Investors are feeling good. Remember the volatility we saw earlier this year? It feels like a distant memory. This rally is a breath of fresh air. It has brought smiles to the faces of investors who had been battered by the bears. This wasn't just a narrow rally either. It was broad-based. Technology, healthcare, consumer discretionary, you name it, it was up. This tells you that investors are feeling confident about the economy's prospects. So, what's behind this incredible surge? One word: earnings. Companies are simply crushing it this quarter. They are exceeding analysts' expectations left and right. This is a clear sign that the economy is stronger than many people thought. Take, for example, the tech giants. Apple, Microsoft, Amazon, they all reported blowout earnings. This tells you that consumers are still spending even in the face of inflation. And when consumers spend, businesses thrive. But it's not just tech. We're seeing strong earnings across a variety of sectors. From energy to healthcare to financials, companies are proving their resilience. This is what gives investors confidence. They see that businesses can adapt and overcome challenges. The message is clear: corporate America is alive and well, and that's great news for the market. Remember when inflation was public enemy number one? Well, it seems like the Fed's rate hikes are finally starting to bite. The latest inflation data shows that prices are cooling down. This is a huge positive for the market. When inflation is high, it eats into corporate profits. It also forces the Fed to raise interest rates, which can slow down economic growth. But with inflation easing, the pressure is off. Businesses can breathe a sigh of relief. This is not to say that inflation is gone completely. It's still higher than the Fed would like. But the trend is moving in the right direction. And that's what matters to the market. A slowdown in inflation is a win-win for everyone. It gives businesses more certainty, it gives consumers more purchasing power, and it gives the Fed more flexibility. Speaking of the Fed, the market is betting that it will soon pause its rate hikes. After all, with inflation cooling down, there's no need to keep raising rates aggressively. In fact, some market watchers are even predicting that the Fed could start cutting rates very soon. Now, I know that sounds crazy after all the rate hikes we've seen, but the Fed's job is to balance inflation with economic growth. And if inflation continues to ease, it could give the Fed room to ease up on the brakes. This is a big deal for the market. Lower interest rates make it cheaper for businesses to borrow money. That can lead to more investment, more hiring, and faster economic growth. It's what we call a Goldilocks scenario. Of course, the Fed's actions are never certain. It will all depend on the data. But for now, the market is optimistic that the Fed will soon be able to take its foot off the gas. What's an investor to do? What does this rally mean for you, the investor? First of all, don't panic. I know it's tempting to jump in with both feet after seeing these gains, but it's important to remember that the market can be volatile. What goes up can also come down. The key is to stay disciplined. Don't chase returns. Instead, focus on your long-term investment goals. If you're investing for retirement, for example, don't worry about the day-to-day fluctuations of the market. Just stay the course and let time work its magic. That being said, this rally could be a good opportunity to rebalance your portfolio. If you've been sitting on the sidelines, now might be a good time to put some money to work. Just remember to do your research and invest in companies that you believe in for the long term. And as always, if you're not sure what to do, don't be afraid to consult with a financial advisor. They can help you create a personalized investment plan that meets your individual needs. Market experts are cautiously optimistic about the recent rally. They acknowledge the positive developments but also emphasize the need for continued vigilance. Some experts believe that the market may have bottomed out and that the worst of the downturn is behind us. They point to the easing of inflation, the resilience of corporate earnings, and the potential for a less hawkish Federal Reserve as reasons for optimism. However, other analysts remain more cautious, warning that the rally could be a bear market trap and that further volatility lies ahead. They argue that inflation remains elevated, interest rates are still rising, and the global economy is facing significant headwinds. These analysts advise investors to remain disciplined and avoid chasing short-term gains. As always, there's no consensus on Wall Street, but one thing is for sure: we're in for an interesting ride. The S&P 500 and Nasdaq's impressive rally this week is a welcome sight for investors, but it's important to remember that market cycles are unpredictable. What goes up can also come down. The key is to stay focused on the long term. Don't get caught up in the day-to-day noise. Instead, focus on building a diversified portfolio of quality companies that you believe in. And remember, the best time to invest is whenever you feel ready. Huge favor, everyone. I would really appreciate if you would please hit that like or follow button. Doing so tells me that you're finding my videos useful. Until next time, everyone, have a great weekend. That's your quick ticker brief.